Hello traders, this is Brian from FinancialTradingJournal.com and welcome to this week's FX Weekly Analysis. Today is Saturday, July 6, 2013, so let's get started. First up, we have the dollar CAD monthly chart. As I mentioned last week, this week was a holiday week. We had Canada Day on Monday and Independence Day on Thursday. The only news-driven day we had was Friday, which was NFP. Employment data came out for both Canada and the States, but Canadian employment data didn't really do much. It was mainly the States that had better than expected employment data, which pushed the markets. Overall speaking, the dollar CAD and the Aussie dollar didn't move that much. As you can tell from the monthly chart on the dollar CAD, this candle right here, in comparison to last month's candle, is very small. So the dollar CAD and Aussie dollar did not move, as you'll see when we go there. Only the pound dollar and euro dollar moved significantly. I think the pound dollar moved about 300 pips, while the euro dollar moved about 250 pips-ish, something like that. So only those were the two movers. The other two were not moving at all. I think the dollar CAD only moved a total of 50 pips, I believe. Last week we closed at 1.0515. This week we closed at 1.0578. So that's about 63 pips. So that's overall not that much on a weekly time frame. So anyways, on the monthly chart, as you can see, we are approaching the next high, which was from 2011. That high was at 1.0656. We are currently at 1.0578, so we're about 70 pips away. We did manage to get close to it this week. I think the high was around 620, so we didn't touch the resistance yet, so that will be the point of interest for next week. So moving on to the weekly chart. Weekly chart, as you can see, we are still relatively strong in the sense of we're making higher highs and higher lows despite a very small move for this week. But that's overall a good sign for bulls. We broke the weekly trend line, as I mentioned last week. We are approaching this level right here, so that's a point of interest. So what happens next week depends on whether or not we break this level. If we do break the level, then we have another black level right here above. This is the monthly resistance. That's at 1.0873. That's 200 pips away after we break this resistance, the weekly resistance. But if we don't break it, then we're hoping to get some support on the way back down, back at the previous 1.042 level possibly, or even the 1.044, or maybe the 1.05, just as an even number. But overall, this weekly trend line should hold because, as I mentioned, we broke out of the symmetrical triangle formation to push upwards. And following the monthly time frame of the previous levels here, where we just went straight up, this one is possibly happening the same thing here. That can possibly happen. We need a catalyst to do that. Basically, for those of you that don't live in Canada, you might not know about our current housing situation here. Basically, there is a surplus of condos right now. So the condo market will probably crash either this year or next year, because basically if you drive in downtown Toronto, every 5 or 10 blocks you can see a new condo being built. And so that's a clear sign that there's a surplus. Also for houses, a lot of people are selling houses lately as well because housing prices have been going up. So it's appealing for people to sell houses, but same thing as what happened in the States. Basically, as soon as people sell, if there's more sellers than buyers, then the prices just plummet. So there's a possibility of the housing market here to crash soon in Canada. When that happens, that will be the catalyst to push the dollar CAD upwards. So anyways, that's it for the weekly chart. Moving on to the daily chart. Daily chart, I have this previous channel drawn. If we extend this line, the top trend line, it's basically just consolidating at the top trend line. That's kind of scary in a sense because two things can happen. It can either just go up or down, because right now it's just hugging it. So it's as if the top trend line is acting as a pivot point right now. It can either go up or go down. Also, we have this small little mini channel here. So if you look at it, this could be a flagpole and this could be a flag. That's a possibility as well. That would be good for bulls, and that would be correlating with everything else that I've been talking about of the dollar CAD going upwards. If, however, we break downwards, then the only logical place to go is either the previous supports down here at 1.042 or down here at the bottom trend line. The bottom trend line is below the weekly trend line, however, so that's a problem. That's a conflict of interest if we do break all the way down there. That is a possibility. I don't see that happening though. I would see price possibly retesting the 1.042 for a full blast off for bulls to go upwards. But that's all I have to say there. 4-hour chart just zooms in on this channel here that we've been forming for last week and this week. So as I mentioned previously, the resistance is up here, so that's the target. Price will probably go down to here, touch that level for a bounce, and then go up to here possibly, and then this will dictate what happens next week. If it breaks downwards, then we have these support levels. Otherwise, if it breaks upwards, then the next resistance level is all the way up here. So that's all I have to say for the dollar CAD. Up next, we have the Aussie dollar. Aussie dollar, as I mentioned previously, the monthly chart shows a very small move relative to previous months. So we only moved, I think, let's see, where did we move? We opened at 0.911 and we closed at 0.903. So that was about an 80 pip move. So that's really small compared to last month's, which was this big red bar here. So that's pretty much all I have to say on the monthly chart. The weekly chart, the point of interest that I wanted to point your attention to is we've seen a lot of upper wicks here, and that's kind of odd and scary in some sense, because you have upper wicks here, upper wicks, upper wicks, upper wicks, a few lower wicks there, but this is mainly upper wicks here. Previously, if you compare this to the previous drop in 2008, we had more lower wicks here. See, we had a few upper wicks there, but mainly lower wicks here and lower wicks there. And then afterwards, price just broke down. So, considering we have upper wicks here, is price going to move up from here, or is it going to continue down? Because the wicks are just basically bears showing their power and saying to the bulls, look, we're going to keep pushing you down no matter what. But as soon as that bear power is exhausted, then bulls will just push right past up through them. So that's a possible outcome. But that is conflicting with the overall, it's going to go down, considering it broke this and this pattern looks the same as that. So we're still targeting the 0.8 level, as I mentioned in previous weeks. That's all I have to say there. Daily chart. Daily chart basically just extended the trend lines I drew previously. So this is similar to the dollar CAD where the trend lines are still in play. Unlike the pound dollar, and I believe the euro dollar is still the same as well. But the pound dollar is different. So anyways, this week I drew these set of lines here, the red lines, just to show that that's basically consolidation. As I mentioned, it's holiday week, so we didn't move that much. We did manage to retrace on Monday, I believe, or Sunday night. So I'll just switch to the 4-hour chart to show you that. Markets opened on Sunday night, and then we retraced. Last week I told you guys that we were expecting a consolidation where price would just go up and down, up and down. We did do up and down, but not in a flat horizontal channel. It was more of in a wedge formation where we have lower lows and lower highs. So this one was a start, and then we had this, which was a lower high compared to that high. Then we had a lower low compared to that low, then lower high compared to that high. And then right now we're just at the bottom of the trend line, which is the same low as before. So moving forwards on a short-term time frame, this wedge signals a possible bounce upwards. So it could bounce up to here, and that would be where I'm seeing price being contained at the resistance levels. And it also is where the top trend line is. That's a possibility, but we haven't really reached the bottom trend line yet. So it can either go down to here or it can go up to there. Those are the possible plays. It has to break out of this wedge first, either down or up, before deciding what the next move is. So that's it for the Aussie dollar. Up next we have the euro dollar. Euro dollar, pretty big candle compared to last month's candle. This candle right now for this month is about half of last month's candle, so that's a good sign for bears. But right now we haven't made any new lows yet. We haven't broken support. Support is right at the bottom here, as we'll see when we zoom in. So that's all I wanted to say there. On the weekly chart, basically as you can see, we are at the bottom of the lower trend line. And that was the target, which I mentioned last week. Target was 1.28. And I believe we got to that low, and then we bounced up a little bit. We're about 28 pips from the low. So moving forwards, this lower trend line is the pivot point now. Whether or not we break determines what direction we go. If we bounce up again, that will be the third bounce now of this trend line. Or if we go back down and we break it, then the third bounce usually does break. Either the third or fourth bounce is where price breaks trend lines. So going back down, we're targeting the low 1.2s. So that's all I have to say there. On the daily chart, if we do bounce, this is a possible resistance. As you can see, this was the lows there and the highs there. And we did have some resistance here as well, support there. So this is the 1.2 1.298, which is really close to the 1.3 level. So either 1.298 or 1.3, that area will be resistance going upwards. That's about 200 pips from here though, so it could go up to there and then bounce back down to test it. It's kind of similar like here, depending on what happens at that point. So if it could just break through kind of like here, or we're hoping for it to break back downwards and target lower lows. So that's all I have to say there. 4-hour chart, we do have this kind of channel now. I just extended the lines previously. This was drawn from those two lows there. This was drawn from these highs there. A possibility would be the bounce up, which would actually be a bull trap, signaling for bulls to get in long. But then if bears come in and they stop it exactly at 1.3 or at the higher trend line, and then it just bounces straight back down, then that's a really good bull trap, and bulls will get trapped there and then they lose money. So I would be careful if you're trading bull, although the risk reward is pretty good right now since we're at the lower trend line. So you could play the bounce, but be careful about exiting it, because if you hold on to it too long, you might turn it into a losing trade, considering dollar strength is slowly regaining. So on that note, I just want to mention something. The FOMC meeting, which is 2 Wednesdays ago, basically Bernanke said there that they would start reducing QE if the US economy was improving. So this week we had the NFP report, which was a good data report. The employment change was more than expected, so that's a good sign for America. That shows the economy is improving. So since the economy is improving, it's following through. So now we're expecting Bernanke and the Fed to basically follow through to reduce QE. As soon as they signal the first reduction in QE, that's when the dollar strength really starts to return, and that's when you see the big moves. Most economists are saying that it's going to happen around September. I doubt it's going to happen in August, because August is usually a holiday month. So on that note, actually, just a sidetrack here, I will be taking the month of August off because it's holiday month. There's no point trading. That's usually when I do other stuff. I don't bother with the markets. Even now, I've already started to close some of my accounts because I don't want to trade these slow markets. And this is holiday months now. July and August is when people take holidays. So markets are starting to slow down considerably. Volume will start to return in September. That's when kids go back to school. That's when markets are starting to wake up again. And that's probably when the Fed will announce the QE reduction. And that's when dollar strength will be returning. So that's it for the euro dollar. Lastly, we have the pound dollar. Pound dollar, similar situation as the euro dollar. Monthly chart was a really big move compared to last month's chart, so that's a good sign for bears. That's all I have to say there. We broke the weekly trend line as well. That's something I mentioned last week. That was a point of interest. Do we break the lower trend line, or do we bounce up again from here? So we broke it, so that's a good sign. We broke it, I believe, in the middle of the week, and we are now approaching the 1.48 low. This was back in March 10th. So March 10th, that was the low of 1.483. We're currently at 1.488, which is 50 pips away from the low. So that will be the point of interest. But considering we already broke out of this, which was, I mentioned, was a bearish flag, that's just a clear signal that we're just going to keep going straight down. We're probably going to get a bounce at 1.483 just for some bull action for people playing the lows. But ultimately speaking, this month I expect the monthly candle to close red, and we're going to make a new low. We're going to have a new low below 1.48. So moving to the daily chart, what I have drawn is potential levels. So this is the 1.483 low. So that's what we're looking at. That's the target to break. If we do bounce, I expect price to be contained by this level right here. This was the low of last month, which was right at the 1.5 level as well. So that's the psych level. This week we broke that. So as soon as we broke that, we made a lower low. So this is price action talk here now. So you start here. This is your low, your first low, and this is your first high. And then this is your higher low because it's higher than that low. And then this is your higher high. And then here, ideally, would have been your higher low compared to that low. But we broke that, and we broke below that low. So this uptrend is no longer valid from a price action point of view. So we're going back down now. Now going forwards, what we're expecting is a lower high. A lower high is compared to this high up here though, and that's a problem because the lower high could be anywhere below the lower high. Now ideally though, we have it capped right here at the 1.5, which was the previous support, which was broken and should become resistance going forwards. So if we do go back down here, bulls will probably play it up for 200 pips or so to go back down up to here, and this is where bears will reload on their shorts, and then boom, price just goes back down from there, and then we target the low 1.4s. So that's all I have to say on the daily chart. And as for the 4-hour chart, I pretty much have nothing to say. It's basically the same as the daily chart. So that's pretty much it for this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next Saturday for next week's FX Weekly Analysis.